All right, hey everybody, it's Nathan Graham, local realtor in Durham region. Happy New Year. If you didn't get my holiday video, happy holidays, Merry Christmas to everybody that's out there. Hey, listen, I know this is a New Year's video and you're probably at home with your family, so if you want to just get the Coles notes, I'll have some point form in here, but I just wanted to share with you kind of the first video of 2024, which I'm ironically recording in 2023, which I just think is funny in my head for some weird reason. Okay, so let's quickly want to recap a little bit of the last year of a few things that have happened, and this is a great national statistics slide of what was going on. Now, this is kind of like a month-to-month of November, what it's talking about. And so we're not really going to dive too terribly much into just November and December. We don't have December stats. We won't until January 4th. So that'll be coming out my first next video on January 7th-ish, 8th-ish, give or take, whatever that Monday is for Market Monday. But here's a couple of things I want to show you guys. So first and foremost, this is all of Canada. This isn't just Ontario, but Ontario, Toronto, Vancouver are some of the bigger driving factors with this. And then we start to see this trend kind of happen all over the place, and we can talk more in depth about that. But here, what we saw in residential sales. So Q1 of 2021, 2022, 2023, this is residential sale activity, seasonally adjusted. So as you can see that the average sales are kind of going down. In 2021, when we started seeing craziness, was the height, but we've been seeing a decline of sales since then. Going into residential, these are the new listings. Okay, so this is the important part of why we see some craziness in the market. So let's go back. If you look at just from 2023, so Q1 2023, we're seeing new listings really start to dive up. And then October, November, they're at a high for new listings. But we're seeing sales are on a decline. And this is just the basics of economics, supply and demand. That's exactly what we're looking at. So let's see a chart that puts all that together. Here we have months of inventory and sales to new listing ratio. We can see, if you remember some of the crazy markets that we were in, that we had a high amount of sales and inventory has been quite low here. Having said that, we're kind of seeing all this balance out. Now new sales are kind of coming down and inventory is going up. So hence we're entering more into a balanced-ish type market. We are typically here in Ontario anyways, we are seeing home prices kind of rise a bit. Well here, look, perfect. It's almost like this knew what I was talking about. We're talking about the average versus the MLS info, not seasonally adjusted, or some of it is. But again, here we have the average sale price, and you can kind of see it begin to flatten out. If you kind of go back to say 2021, a little bit up before that, end of 2020, beginning of 2021. So like right towards the end of COVID, right before craziness started happening, we're kind of just leveling it out. Now, what I like to see here, obviously we still see some instability, but what I do want to show everybody is that it's leveling. So there's a lot of talk in the market, for example, about waiting until prices crash even more. And before I go on, I do not have a crystal ball. I can't tell you what happens. There's a variety of factors that go into this. What I can tell you, though, is this feels like a consolidation period for real estate where we're just consolidating. We're not as low as we were selling in July, yet we're not as high as we were before. So we're in a consolidation point. What's this next slide? And then we can see the average price year over year percentage change. So our average price again from last year to this year, it's just up slightly again. So we have a full year and we're just up slightly. This is kind of an indicator that, again, unless something happens, we're not going to see prices go down. That's just kind of the reality. I think we're kind of at our benchmark, our bottom. And then this is just kind of the benchmark for a bunch of other things there. Okay, so long story short, we're just seeing stability in supply and demand, and that's one of the big things to talk about. So this year, since June, I've described it as a very, very boring market. We've seen some lows, we've seen some highs. We definitely, from January till June, we saw this massive increase of everything starting to go up, and then all of a sudden we hit a brick wall. A variety of factors play into that. Nonetheless, the increase of interest rates, which we know so much about. So let's talk about the increase of interest rates just quickly. I'm just looking at the 5-year Canadian bond rate right now. 5-year Canadian bond rate. This is something, as you can tell, I look up quite a bit. Go to the market watch. So we're going back to the last close, which was not yesterday, Friday. We closed at 3.17. Okay, so what's important about this? When we go for the 1 year to date, we are actually down from where we were, where we started the year. And this is very, very important. This is kind of a key indicator of our 5-year fixed rates. When we started the year, I think I was looking at something saying like our 5-year fixed was a fair bit lower than it is now. I don't think we were at the 5 mark, I want to say. I'll have to double check that info though. But if you look at the last 3 months, we're down a huge amount in the bond rates. So this is like the precursor to what mortgage rates will do. And we can see mortgage rates are responding. This is something that we take a look at we have been every Monday. And these are kind of the big banks. So you can always get things a little cheaper. Talk to your mortgage broker. But like we can look at a 5-year fixed right now at 4.89 with a Canadian lender. We can look at a 3-year fixed at 5.29. Like this is if you're looking at a renewal rate now for a 2 to 3 year, you're looking at under 6%, which we haven't been seeing this for a while. And I was speaking to a few of my mortgage broker preferred vendors, and what's interesting that's happening is normally we just see this direct decrease of rates. And that's not exactly what we're seeing in the mortgage broker world. What we are actually seeing is they're being paid more by the lender to get them a mortgage, which allows them to buy that mortgage rate down a little bit more. So that's why you still can see some people get 4.89, 4.99. It's just giving them some freedom in a 5-year fixed insured mortgage. Insured mortgage means less than 20% down. So that's a very important part. If you go more than 20%, your interest rates go up, but you lose the CMHC cost, which is cheaper than what you would pay on interest. So anyways, this is going to be one of the key drivers going into the market in January 2021, as well as December is naturally a time when we start to see less inventory, right? So I've spoken about this in previous videos, and I'm going to keep harping on this in future videos, but the spring market is not when y'all think it starts. The spring market for realtors is January, February, and March, because we haven't fully recovered from that inventory drop from December of everybody coming off the market. The other thing is a lot of people, for some reason, like to sign their listings, realtors and clients will go to December 31st and figure it out in the new year. So we're going to see a lot of cancellations coming in. Now, buyers are still out there. Because I'm actively in the market on a day-to-day basis and not just talking about what CP24 is talking about, we started to see a big spike over the holiday week on showings. Like I had a listing that just hasn't been moving a whole lot, and all of a sudden we got about 5 showings booked between Christmas and New Year's. That's a fantastic sign leading into the next market. So buyers don't stop. Serious buyers are still out there. It's sellers that kind of take their place off the market. So what this means is I'm expecting anyways, a very good January, February, March type market. Now, a few things can go into this. We don't know some of the announcements that are coming out. Recently, our Bank of Canada said they're not going to be following the US when it comes to interest rate cuts. So that's one aspect. So we don't know exactly what that's going to look like and how much it's going to go up or down. I don't know if we're going to have an exciting or a boring market, but what I can tell you, it's looking like we're going to start having a great market again. And now if I go back historically, last year from 2022 to 2023, 2022 towards the end of the year was a very slow market. Dare I say slower than now. And it was January 1st, everything just started picking up. Literally, or I guess I should say January 2nd, but I want to say January 1st, we started seeing showings booked right away. So if you are on the fence about listing and you are thinking about it, remember, last year we saw the spike from January till June, so we could be looking at a good spring market up and coming on all things considered. Now, something else I want to touch on, though, TD rate bank news. Okay, so here, this is something that came out. I saw it kind of posted. It came out 4 days ago at this time. I kind of saw it posted in around Facebook and all the rest. I wanted to touch on it because I think it's worthwhile having a conversation about, because you may have seen it. Now, this is something else that's going to be a driver within our market. Now, keep in mind, federally and provincially, we do not want to see the housing market that we saw from 2 years ago. So we are going to see people put things into place, governments put things into place for that not to heat up that way, or expectedly, in theory, we should see that. So when we see something like this, Bank of Canada to drop interest rates to 2.25 by 2025, according to TD, by Laura Hanrahan. Now, this is from stories.com. And I will say, with reserving some judgment, I have never come to stories.com. First I've ever heard about it was this article. And when I went to find the article, I Googled Bank of Canada. So let's just quickly Google what this is before we dive into the story, because we really need to caveat this. Oh, there we go. Okay, actually, you know what? Here we go. Long-term forecast from TD Economics. So this is actually really promising. Okay, so here we go. This is the long-term forecast from TD. So originally I was going to tell you I couldn't find this article anywhere, but apparently we can. So following the economic slowdown in 2024, we should see a rebound in 2025, 2026. Long-term growth, stabilize 1.8% annually. This will be driven by solid population growth and labor force growth, while productivity growth lags behind. Consumer spending will undergo a period of below-trend growth through 2026 as Canadians' households save money in the face of high mortgage debt. So this is kind of what we're seeing now. We're going to see the remainder of that part of it. In the sense that like the people getting into mortgages now are going to be paying that through. So business investment is expected to grow above the trend forecast. We need to build more homes to boost. This is a key, people. We need to build more homes. We do not have near enough homes. And after a period of high inflation, we expect to see the headlining core consumer price index decelerate down to 2% over the return. So again, inflation is coming in. So this means we could, like TD Bank is predicting 2.25% interest rates by 2025. This is fantastic news for all those people who are renewing mortgages. I personally think 2.25 is a little aggressive. That'd be awesome. I think that's a little aggressive, but time will tell. I might eat frog in 2 years for this one, or a year and a half. Either way, this does mean we're going to see interest rate decrease over the next year, which means we're going to see buyers get back into market, and we're going to see prices come up. So again, buyers, pay attention to this. If you're kind of on the cusp waiting for prices to come down and you can buy now, you might be pricing yourself out of the market by not getting in now. So just be cautious on that, people. Okay, so that's kind of just a really quick mortgage update and housing update. Again, all this is all predictions. I can't tell you whether or not this will come true or not come true. I'm just saying this is the way everything is headed. There's a lot that can change between now and then. But as far as things are looking for a very positive 2024 and a very robust 2025. So if you are thinking about buying or selling, or investing, because I feel like the next 6 months is going to be a great time to invest in real estate, as a personal opinion, please reach out. Let's have a conversation. Let's have a coffee. Again, just because we have a coffee doesn't mean we're working together, and we can just talk this through. We'll talk about what's happening, what's going on in our markets. There's no harm in that. So reach out. Let me know if you have any questions. Until then, again, everybody, have an absolutely happy new year. Thank you for taking time to watch this, and please like and subscribe to the YouTube channel if you want to see more. I'm going to send out these videos once a week, but I'm going to try to keep my YouTube channel up to date as news starts coming in. All right, chat soon.